My name is Billy Nauman. I'm a reporter at the Financial Times, and I produce the Moral Money newsletter where we cover ESG, sustainability, and all sorts of topics around kind of conscious capitalism and this new movement that we've seen going on. And I'm here today with John Rogers, the founder of Ariel Investments, for the IEFA Conversation Series, where we wanted to talk about what we're seeing right now in the economy with the COVID-19 crisis, and kind of how that works intersectionally with all of these topics we've been hearing about so much on environmental, social, and governance investing, as well as the importance of diversity and inclusion, not just for asset managers, but for companies across the board. So, John, thank you very much for joining us today.
Oh, great to be here.
So, John, you've been investing for a long time. I mean, I think we should probably start at more of a macro level, and just try to get a scope of kind of what we're seeing right now in markets with this crisis. And obviously, it's not good, but are there opportunities out there? Or are you seeing? I've seen evidence that certain ESG indices are doing well. Comparatively speaking, green bonds are doing holding their own against investment grade. Are there any trends you've been seeing in terms of opportunities amid the turmoil?
Well, as you know, this has been the most extraordinary and heartbreaking time in my lifetime, but probably since the Great Depression. And it's just been extraordinary. The velocity on the way down, it's just been unimaginable. The pain has just been extraordinary. There's so many parts of our lives here in America and across the world. So for us, though, we are long-term investors. Our logo is a turtle, and we often quote Warren Buffett, who always reminds us that last century, the Dow started at 66 and ended at over 11,000. And of course, last century, we had the last pandemic. We had 2 world wars, the war in Vietnam, the Great Depression. So many extraordinary things happened to our country, and we always bounced back. We always came through it. Our capitalist democracy worked for us and made our country stronger and made the stock market strong. So we feel highly confident today that this is going to be a great time to invest. There are bargains everywhere. And if you're willing to look out over the horizon, over the next 18 months, 2 years, 3 years, you're going to look back and say, this was maybe what we would say a once in a lifetime opportunity to buy these extraordinary bargains at great, great low prices. We're finding them in many, many industries. There's many areas that are just getting crushed today. Some of them, of course, are the ones around leisure time and hotels and vacation places and vacation opportunities. Media stocks have been getting crushed, certain parts of the financial markets, oil and energy markets. There's so many places to play now, so many places to look for these bargains. But that's our basic message. Lean into this. This is going to be a great time to invest.
And one of the very interesting things I've been seeing coming out of this is kind of a shift in tone, if you will, from companies and investors. I mean, we've been hearing a lot about conscious capitalism, the Business Roundtable statement of purpose, the prioritization of stakeholders alongside or above shareholders. And this seems like a time where sort of the social aspects of ESG might be more prominent. You're seeing companies that are facing massive backlash for maintaining dividends and cutting workers. We've got more than 20 million people, I believe now, unemployed as of the latest count, but in the U.S. alone, excuse me. And companies that are doing layoffs but maintaining executive pay, maintaining dividends, maintaining buybacks they're getting a lot of negative press. Do you expect that to translate into action from investors? Do you expect markets to react negatively to companies that are not putting a premium on stakeholders and workers in particular?
Well, I would think it's probably a tale of two cities. I think the large multinational companies in the Fortune, 500, those giant companies, they have responsible boards of directors. They're taking ESG very, very seriously. And every day as I'm doing my research, talking to management teams, sitting on boards of 3 public companies, everyone is talking about what they can do to show that the company is compassionate. So you're hearing more and more about companies not only cutting their dividends, cutting their buybacks, but management's taking severe haircuts in their compensation from 40% to 100%. You're seeing boards of directors dropping their board fees for at least 6 months to a year. So I'm seeing more and more energy than ever around making sure that people are thinking about how they come across in this extraordinary environment. And I think I've been really pleasantly surprised by that kind of can-do spirit. Now, I know there are certain one-offs in certain industries and certain smaller companies that feel like they're out of the spotlight and can get away without thinking about doing things in the right way in this regard. But the larger companies, I think, for the most part, are going to be making the right decisions, especially when their industry is severely challenged.
Do you think markets will reward them for making those decisions, or is there still enough, people focused on immediate short-term implications of an action like cutting dividends or buybacks to counteract the long-term narrative?
I think the markets will reward those companies that are doing that because now liquidity and cash flow is more important than ever. You have to have enough money to survive this extraordinary time. You've got to be able to get to the other side. So cutting the dividends, cutting the buybacks will generate more and more cash for management to be able to live through this crisis. And I think that will be rewarded by the markets. The markets right now hate debt. They hate companies that have liquidity problems, people that are going to have to be able to, companies that are going to have to renegotiate their covenants. People are really taking no prisoners with those companies that have not had the pristine balance sheets to be able to live through the storm.
Great, that's very interesting. Do you think there's a danger before all of this, before the coronavirus crisis really ramped up here in the Western Hemisphere at least? Last year, there was so much talk about climate and climate actions and investors pushing companies to report and cut carbon and pressure for carbon taxes. Do you think all of that goes out the window until this coronavirus crisis subsides, or is there room to do both?
I think there's definitely room to do both. And I really do think that train has left the station. Again, the large companies realize that not only is it the right thing to do to care about the climate and care about ESG in a serious way, but they understand that not only do their shareholders care more and more, but their customers care deeply. And so many companies want to be able to interact with the next generation of investors and next generation of investors and next generation of customers. And so I think that's so critical. And so I've seen it on the boards that I'm on at Nike. I'm on the committee that oversees ESG. They take it very, very seriously. There's a lot of energy around it. Same at McDonald's. I used to be on the committee that oversees the ESG efforts. And it's just being ratcheted up more and more and more and more. So I really do think that this is it's just become the norm now. People just realize this is such an important part of having a successful company for the 21st century. You've got to be ahead of the curve when it comes to these important ESG issues.
What are your thoughts on a similar issue where we've been seeing a lot of progress on diversity and inclusion? We've been seeing board diversity being a major topic for investors and companies. We were seeing, gender pay gap talks coming up all the time. We were seeing a lot of action starting to take place. Is that also, is there bandwidth, or are you still seeing progress from companies on taking diversity and inclusion seriously?
Well, I think we're seeing progress in certain aspects of it. It's sort of interesting to me. You'll find many, many companies that have a more diverse board of directors than they do a management team. So you'll see progress with the board, more women, more people of color, again, on the board of directors. But then when it comes to the management, you see who's on your management committee, who's in your leadership roles, who are the top officers, and often it's still too much of traditional white males. So I think we have much more to do when it comes to the hiring side, not as much more work to do on the board side. And then finally, when it comes to doing business with minority-owned businesses and women-owned businesses, that's where we're actually at the worst. It's just so hard to get companies to get out of their comfort zone and work with minority-owned businesses in everything that we do, from financial services to legal services, accounting services, advertising, marketing, technology, all the aspects where wealth and jobs are created today. That's where more enlightened companies need to be working with minority-owned businesses, not just the traditional supply chain efforts. In fact, I think the term supplier diversity should be abolished And it should be something like business diversity to show how our economy has evolved. If you want to make a difference, you need to be inclusive with everything you do.
Is that something that you can see progress being made on in the I mean, when everything shut down for coronavirus and lockdown, and is that something that we have to come back to, or are there ways that you see progress being able to be made even now on diversity and inclusion and working with those sorts of companies?
I see progress in certain aspects of it. So my best example right now is that our House of Representatives has become much more progressive. You have Maxine Waters chairing the Financial Services Committee, and Congresswoman Joyce Beatty, the Subcommittee on Diversity and Inclusion. They are having a profound impact on pushing financial institutions to be inclusive in everything they do. And it's because you have the most diverse, most progressive Congress in the history of the country. So I think there's real change happening there. And when you have those leaders that have subpoena power, fighting for fairness and inclusion and fighting for economic justice, you're seeing progress being done in the companies that they regulate and oversee. But too often in the real world, we don't see enough progress still. And major corporations talk a good game, but in reality are not doing much differently. And in this environment, it gives them even more of an excuse to not work on it, to find excuses to put it on the back burner. Mm-hmm. And that's what really is troubling. And then finally, we need to get the universities, the hospitals, the museums, the foundations, and the anchor institutions in our community to work with minority companies, because it's so important now, because people of color work in these small minority-owned businesses. Women work in these small minority-owned businesses. And if we care about their livelihoods, their healthcare, their safety, we've got to make sure that they have jobs and career paths. So it's more important than ever, actually, to make sure we're working with minority-owned companies in this COVID environment, because people are so desperate for jobs and having an opportunity to build their own wealth and build their own career paths.
I think that's a good segue into one of the other topics we wanted to talk about today, which was the path to recovery. How do we build back from this, and how do we build back, a world that's better? You mentioned the most diverse Congress in the history of the country. Are you seeing these sorts of issues being prioritized in just the stopgap measures to keep things afloat, but then how do we make sure that those issues are prioritized when the plans are set up on how we get things back on track?
Well, I do know when it comes to this issue of inclusion and fairness, the Congress is pushing really hard. The negotiations between the Senate and the House have often sometimes broken down because there's been such an immense effort from the Democratic House to make sure there are unique efforts to be able to support the minority communities in this country that have been so hard hit by COVID. So I think that is really an important part of this new leadership regime and the kind of challenges that they're facing us, but they're fighting hard to make a difference. And we just have to keep going. We have to keep pushing. We have to keep negotiating, because as we know, when people lose their jobs, they lose hope. And it's just so important to be able to create a way to really cut this wealth gap in our country that's gotten so dramatic. And as we know, the data is so profoundly disturbing of how much worse things have gotten over the last 30 years or so. So it's something that we have to continue to talk about if we care about social justice and care about building an economy that includes all aspects of our economy and all the talent in our economy.
Are you seeing any progress on that from banks in particular? I had a conversation with Mirza Baradaran a few weeks ago, who's a professor who's written on this topic quite a bit about the distribution of the government stimulus package and how poor people across the board have less access to financial services than rich. Obviously, that's the entire world. Here in America, the problem of wealth inequality is inextricably linked to racial inequality. Are you seeing, I think, the $1,200 checks that we're all supposed to get, may come 6 months from now, and then people who don't have bank accounts then have to pay a check cashing store, then have to go pay that same check cashing store to write a check to pay their bills with it. What sort of efforts are you seeing from financial institutions to help with financial inclusion here in the U.S.?
Well, I think they have a long, long way to go. They're slowly but surely making progress, the major banks. And we have some that have done been extraordinary for a long, long time. Here in Chicago, the Northern Trust has done some amazing work when it comes to diversity and inclusion, having probably the most diverse board of any board in the country, 2 African Americans on their management team. They have been, I think, a role model for how to do a lot of this in the right way in the last several years. The banks, I think, but for the most part, still have a long way to go. They still think about the ways to help our community is through micro loans. And that's important. And we need to have access to capital for our businesses. We need to get the money sent to our communities from the government during this tough time. That's important. But we also need access to customers, because all these small businesses that are failing, if all the money center banks and the major money center banks did business with minority entrepreneurs and all the things that they buy, you think about these companies that are multi-billion-dollar enterprises. They buy everything from legal services to financial services to caterers to dry cleaning to everything that's done in our society. There has to be a real commitment to do business with minority companies. And that's ultimately where you really create a lot of wealth, as well as access to capital. I tell people all the time, if you look at the Black enterprise list of the top 100 companies in America that are Black owned, a disproportionate amount of them are restaurant suppliers. Why is that? It's because McDonald's years and years ago made a commitment to work with minority owned restaurant suppliers, to be able to agree to buy sausages from this supplier and ice cream mix from another and logistics from another. And those companies became multi-generational, large businesses with hundreds of millions of dollars of sales. That's why they're in the top of the list of that BE list. And none of those companies can go out and get all the capital they need because they have successful businesses. They've demonstrated success. They have an anchor customer, and they can go out and lend to build bigger factories and grow their businesses. So we need that kind of a role model where people understand, banks as well as all the other Fortune 500 companies, you've got to do business as well as thinking.
Sorry to cut off. Is that something banks or companies can be expected to do on their own, or does there need to be government incentives to do so? You mentioned Northern Trust. I know you're in Chicago, and I know the state of Illinois has pretty stringent rules for its public pension funds in terms of using minority-owned brokers, using minority-owned financial services companies. Do you think programs like that are an effective way to help promote the usage of minority-owned vendors in the financial services industry?
Our Illinois program has been fairly successful, but it came from dynamic progressive political leadership. Our former Senate President, Emil Jones, pushed hard to get those pension funds to open up and be inclusive. So did a young state senator named Barack Obama. And then,
I've heard of him.
Yes. And our current Attorney General, Kwame Raoul, and others fought to get those doors open. These doors just don't open up magically. You need progressive political leaders, and you also need progressive civil rights leaders. As we know how hard Dr. King fought, and Congressman John Lewis, Reverend Jackson, Reverend Sharpton, and others to get these doors open. And when you have progressive political leadership, it matters. When you have a great mayor like we used to have here, Harold Washington in Chicago, Maynard Jackson in Atlanta, people like that, they fought to get doors open for all aspects of the economy, realizing that was what was going to build multi-generational wealth and create a chance for all the talent in America to be fully utilized in our economy.
In an environment where we have political leadership that would be, how do I say this, less inclined to open such doors, are there levers that can be pulled through the private markets? Are there investor groups that can put pressure on companies? Are there ways to do this without progressive political leadership? Because in many areas, I think progressive political leadership is not there in a lot of parts of America.
You're right. There are people that are Black and white in all generations who are out there fighting for social justice and economic justice and can make a difference too. And you need those kind of change agents, not only in corporate America, but in the nonprofit world. Because you think about it, universities and hospitals are major economic engines in their respective cities. But when you have, at Exelon, for example, here in Chicago, they have a top leader, Bill Nauman. He's made such a difference in making sure that Exelon is being inclusive, not only with what they do internally, but pushing all of their professional services firms that work with them, that have diverse managers and partners on the relationship with Exelon, and rewarding those companies that are living the values of Exelon. When you have that kind of leadership, change happens, but it just doesn't happen naturally.
Yeah.
People are used to doing business with people who look like them, and doing business with people they've been doing business with from generations. Those opportunities get passed along from generation to generation. So you need change agents to come in and break that up and be more and more inclusive.
Are you seeing any of it from the investor engagement side of things, where I know that a lot of asset managers and asset owners are putting pressure on companies to adopt, whatever targets or policies? Are you seeing that kind of take that next step and push companies to change, the companies they use on their supply chain, or anything along those lines?
This is happening slowly but surely. Some of, again, the big public pension funds are doing it. Some of the top foundation, the Rockefeller Brothers Foundation, the Knight Foundation in Miami, Kresge Foundation in Michigan, a handful here in Chicago, the Chicago Community Trust, are starting to ask these questions. And they're hiring a private equity firm or a venture capital firm asking, where's the diversity? Where are the women and people of color on our relationship? Oh, and then where are the minority women-owned firms that can do private equity or venture capital or long only? You're finding more of those questions being asked by progressive foundations and endowments, but it's taken a long, long time. The vast majority of them still have not had what I would call a Jackie Robinson moment, and put their first steps into trying to really find diverse talent wherever it happens to be.
And what is the step beyond finding diverse talent to make sure that, finding diverse talent, hiring diverse leadership, and that actually has the intended effect of lifting up communities, of closing that racial wealth gap, getting rid of inequality? How do you look at the follow through?
It's interesting, and at times it doesn't always follow through. We see that from time to time, but just look at this last year. Robert Smith from Vista Equities came out and gave scholarships to all the students who graduated from Morehouse College that year when he was giving the commencement address. We've had great role models here in Chicago of African American entrepreneurs who did so much for our community, not only hiring hundreds and hundreds of people, but being very politically involved, being involved in the community, helping start other businesses, supporting other Black businesses. It becomes a supportive ecosystem where more and more people are employed in our communities because these institutions thrive and succeed. We've seen our own Melody Hobson, our co-CEO at Ariel. She's made an enormous impact on the community and been a role model for young women to think about financial services careers. So there really is a benefit to our society when firms like us exist. And then we talk about the fact that at Ariel, when we invest in companies, we always are challenging those management teams to look like a 21st century management and a 21st century board. We can point to 40 instances where we got a company to have their first diverse board member because we were pushing and fighting and asking those tough questions. So when we think a small firm like us can do that, what it would be like if all the big mutual fund companies and money managers were insisting that the investments they were making were doing the right thing and living the right values that were consistent with our country's dream.
Great. Well, this has been a great conversation. I think we can wrap it up soon here. But before we go, I wanted to ask kind of, what is your prediction coming out of this current crisis? What will it take to get the economy back on track? And more importantly, what will it take to get the economy back on track in a way that helps us build back something better? And is there a way, in this crisis, is there an opportunity to make some progress on fixing some of these issues that you're focused on fixing?
Well, I would hope so, that when we come through this, Americans will be closer than ever. We're going to have more faith and confidence in each other. Hopefully there'll be more bipartisanship, less racism and sexism and homophobia and all the different challenges that we face in our society. I think America's coming together to fight this plague, to fight this horrific virus that's impacted our society. So I think that's going to be the benefit, the positive that comes from that. And, you know, I'm not a doctor by any means, but I do think that the things we've been doing so far with the social distancing and constantly reminding ourselves of how we have to do all the basics that you've all heard so much about, I think that's going to create the environment for us to come back safely and surprise people that we'll be able to come back faster and stronger than most people imagine.
Great. Well, thank you so much for speaking with us today. I really appreciate it. And yeah, have a good rest of the day. Nice to talk to you.
Thank you. Really enjoyed it.
Likewise.